valuations for the PSEI right now are very cheap. Okay, it's not even at the midpoint yet. Currently, we are only trading at 13.8 times PE. Okay, clearly, when the market is closer to this lower level, there's a bigger chance that it will go up. So currently, we're not even at the midpoint, so there is a stronger likelihood that we will go up, the market will go up because of the attractive valuation. Okay, so the sell-off is an opportunity to buy cheap. Well, our advice to you is to stay invested for those that are still in stocks. I don't think there's any point in selling right now. And for those that are not yet in the market, we are going to advise you to follow a buying plan. The sell-off might last for a little bit longer, might last for a few more months. But then again, we think you will be all right if you follow a buying plan or an investment plan, so that you will have a good price. Okay. So our stock picks are stocks which we believe will be major beneficiaries of the economic recovery. We are quite confident that the economic recovery has not ended. In fact, it will still continue. So our stock picks will benefit from this economic recovery. And aside from that, we like companies that have favorable company-specific initiatives that will allow earnings to grow. Okay, stock picks right now, well, yeah, they're quite a lot. We have DPI for the banks, BTO, Metro Bank. For the properties, we like Ayala Land and Mega World. For the other growth plays, we have Nickel Asia, we have Semirara, Alliance Global, DMCI, ICTSI, and EDC, Energy Development Corp. So anyway, later I'll talk about them one by one. Okay, well, as we've said, we'll be providing you with a buying plan, an investment plan. So we've set 2 levels of buying. So the first level is a buy level, where at least, you don't have to buy a stock if the valuations are full. You buy them at a level where there's an upside of at least 15%. However, given the bearishness currently in the market, you might actually get to buy them at high conviction buy levels. So what do we mean by high conviction levels? Well, these are prices at which they would be trading at historical average PEs or historical average price to book values, despite the fact that earnings are already above average at this point. And then we've also assumed a scenario wherein the risk-free rate would shoot up to 9%. Okay, currently, as I've shown you, the risk-free rate is only at around 7%. But assuming a worst-case scenario wherein they'll shoot up to 9%, you should still be okay. So if we factor all that in and the price goes below that, it means that the selling has been overdone. Okay, why do we like the banks? Well, we expect the investment-driven economic growth in the country to lead to higher demand for loans. Okay, so that should benefit the banks. And well, banks at this point in time are well positioned to increase lending because their balance sheets are very strong. They're highly capitalized. They have cleaned up the non-performing loans. They have high levels of provisions. And they have a lot of money to lend out. As I've said, they have so many deposits in their books. Their major problem right now is, what am I going to do with all these deposits? Okay, contrary to what people think, they will actually benefit from higher interest rates because they have bigger loan portfolios relative to trading portfolios. And among the banks, the big banks are best positioned to grow the lending portfolio because they have the biggest or the best access to cheap deposits. Okay, so we like BPI, BDO, and Metro Bank. So we've set the our conviction buy levels at 51.20 for BPI, 47.90 for BTO, and 65.1 for Metrobank. So for BPI and BTO, our conviction buy level has been set at the historical average price to book value levels. For Metrobank, the reason why we have set it at a higher level, well, 1.44 is similar to BDO, no? But the reason why it's higher than its historical average is because the bank has taken measures to make profitability better than what it was during the past cycle. Okay, so previously they had big problems in terms of non-performing loans, asset quality, their capital base. But of course they raised capital, they've cleaned up the books. That's why we think earnings or return on equity levels will already be much higher, to a level that is actually similar to that of BDO, which is why we've increased our target price to book value, okay, above the historical average. But anyway, if you look at the table here, I think the important point to consider is that Metrobank is already a conviction buy at this point in time. Okay, BPI, well, you might have to wait a little bit. Same for BDO, but you know, if you want to buy it, maybe you can create an investment plan to buy it already over the next 6 months. Okay, for properties, well, I know that they've been one of the, they've been sold off the most during the past few months. However, I'd like to share to you why we remain bullish. Okay, residential demand continues to be strong, and this is driven by a huge backlog in fresh availability of affordable payment terms. So every year, we have 600,000 new households being formed. 80,000 of them are in Manila. Okay, so that means the new households need new residential units. Okay, and unlike before, well, I remember before, during the time of the Asian financial crisis, there was no such thing as a 15-year loan, a 20-year loan. You couldn't buy a house even if you could afford to pay 10,000 peso a month. You had to save up for it. But today you could actually buy something with 10,000 a month. So that opens up a bigger, much bigger market. So we're quite bullish on that. Office lease rates to maintain uptrend. In fact, our talks with property consultant Jones Lang LaSalle says that they expect a shortage to take place in 2012 because there are not a lot of new office space coming out. Okay, then there have been concerns about the delay in the REIT passage, but we'd like to say that ability of companies to grow is not dependent on the passage of the REIT law. This is because, for example, companies like Ayala Land, SM Prime, and Mega World, they have actually raised enough capital already. Ayala Land recently raised 10 billion pesos in long-term loans. And for Mega World, recall that they actually have a warrant, a detachable warrant that is exercisable at 1 peso. So they have 4 billion pesos worth of warrants that are exercisable. And they could raise as much as 4 billion pesos. So not to worry about these companies not having money. And well, our best companies are companies with sizable, good quality land bank and strong cash flow that will enable them to roll out their plans. Okay, the two best property companies in our opinion are Mega World and Ayala Land. And well, our conviction buy levels are based on historical average discounts to NAV, or 47% discount for Mega World. Ayala Land, 27% discount to NAV. So as you can see, Mega World is currently trading at only 206 versus our conviction buy level of 237. Ayala Land is at 1470 versus our conviction buy level of 16 pesos, 1602. Okay, other growth plays. So we have DMCI. Well, DMC will benefit from the investment investment-driven economic recovery, given its focus on construction and other businesses that are set to benefit from investment recovery. Semirara. Semirara will benefit from the global economic recovery because of the increasing prices of coal. And aside from that, we are very bullish about its plan to become also a power generation company, because being a vertically integrated power generation company will lead to higher returns for the company. Then we also like Nickel Asia. Similar to Semirara, being a materials company or a commodity company, it will benefit from the global economic recovery. Not to mention the weak US dollar, because the weak US dollar will lead to higher commodity prices. Okay, so that should benefit Nickel Asia. And we also like ICTSI because it's a beneficiary of the growth of emerging markets, given the presence of its ports in emerging markets. We like AGI for its exposure to gaming. If you are aware of the gaming numbers coming out of Macau and Singapore, you'd actually take a second look at AGI. Macau's gaming numbers last year were up by 58%. And in Singapore, during the first year of operation, total revenues are 2.8 billion US dollars and are expected to double this year to around 5.5. Okay, we think that it can be replicated somewhat here in the Philippines through AGI's casino and travelers. Okay, EDC, we like EDC for its exposure to renewable energies, or for being a pure play in renewable energies. Okay, so for them, usually we do a DCF-based valuation, and we've bumped up our discounted cash flow or required risk-free rate to 9%. Okay, and then for companies like DMCI and Semirara, we removed our assumption on the Calaca Brownfield expansion to make it really conservative. Okay, so our high conviction level for DMC is 31.2. For Semirara, it's 127.85. Okay, and for ICTSI, we assume that it would be a good buy if it traded at its historical average PE of 15 times. So that would come out to around 38.20. Okay, AGI right now is already a good buy. Since we already assumed a 100 basis point increase in the risk-free rate. For MEG, we assume that the value would only be 47% discount to NAV. For Emperador and its other subsidiary GATC or McDonald's, we only assume the target PE multiple of 12 times. Okay, for Nickel Asia, in our DCF, we assume that the risk-free rate would be 9%, and aside from that, we assume that nickel prices would drop to $10 per pound. Okay, just to put $10 per pound into context, in 2009 and 2010, the average price of nickel was $11 per pound. So $10 is actually a 10% discount already. So if you're able to buy nickel at $18.40, that's a very good price, especially considering that nickel is currently trading at around $12.40. EDC, well, this stock is really cheap because we already assumed that the risk-free rate would increase to 12%, but still, it's still a high conviction buy. The high conviction buy is $6.93, which is around 20% higher than the current price of EDC. So the stock is really cheap. Okay, so in summary, why should we remain bullish? Well, factors that led to the market's current sell-off are only temporary. As I've shown, there are no signs of a bubble. So in light of that, we don't think that interest rates will rise sharply. And the Philippines is clearly more superior than the US. So inevitably, the funds will flow back to the Philippines. Okay, and of course, we want to be invested in winners.